What's going on, guys? Welcome back to another video here. In this one, we're going to be talking about a really powerful reversal strategy that I use, that a lot of my students use as well, that you guys can then start using in your trading every single day as well. So without further ado, guys, let's get into it. If you guys do enjoy videos like this, make sure you guys hit that like button down below. Drop a comment if you guys have any questions, and subscribe for more videos like this. And one other announcement, guys, I am going to be opening up about 10 spots to the waitlist to my 3 private live streams per week. The watch list of stocks that are about to explode before they do. We had some awesome ones this week with First Solar and GM. Those were absolutely filthy. You get access to the hours upon hours of additional educational content as well. There's a lot of you on the waitlist here. I'm only going to be accepting 10 of you guys because, well, I give you guys my undivided attention to ask me questions all of the time, so I want to make sure that everybody fully understands everything because of how powerful these strategies are. If you guys are interested in joining the waitlist, check out that link down below. But let's get into it here. So, reversals. Couple of things first, as always, guys, let's make sure that we set our expectations up so that we know what to expect when going in and trading some strategies like this. So, first things first, all of you, and I say this a lot, all of you think you're going to be turning really small amounts of money into really large amounts of money. Now, with day trading, the margin for error in most cases is very small. And as a beginner, or if you're new to the markets, you're going to just go through some of the typical beginner mistakes that normal traders are going to make. Now, if you want to be able to turn smaller amounts of money into very large amounts of money, now the way to actually do that is swing trading. And that is the core of what I do mostly every single day here. And I will have a video out for you guys next week as well. But I want to make sure that your expectations are set up. This is not let's go into the market and try to turn $10 into $10,000 in a day. That is not what we are here to do. And it's not a long-term successful way to think about the market either. In order to have long-term success, guys, you have to build that foundation first and be able to have the skills to generate those profits over the long run. If you can't trade on a $1,000 account, there's no way that you're going to be able to be profitable on a $100,000 account or $1 million account. Hopefully, you guys all get to that point. And again here, long-term vision, we've gone through this a lot, but let's go into something else. Reversals can be very dangerous. Now, I have a little story about this. What a lot of people like to do with reversals is they like to use their own discretion and think, oh, the market has gone up, whatever market you're trading, a significant amount, it must come back now, and kind of mean revert to some sort of level that you think it's going to go to. Now, obviously, that's not a strategy, but again, a lot of people can fall into that type of thought process. If you're on tilt, if you're having a bad day psychologically, emotionally, if things aren't necessarily perfect for you to be trading. And I honestly have a story about this too. There was one day many years ago where I thought, according to the data that I was seeing, that the market should not have been going up. So I decided it would be a great idea to continuously average down on 0 day to expiration SPX contracts. Now, the market did not come down. It did a little, but it really did not help after all of that averaging down. And I ended up down that day about $7,000. That is not what I want for any of you guys. And I want to make sure that that is clear before we start talking about the actual reversal strategy, because I don't want anybody to come in and think, all right, well, just because the market is going up, then it must then come down. That is not the case. We're going to go through the strategy, but I want to make that very clear. So, when we move over here, I want to go through kind of the core concepts of what we're going to be looking for when we execute this strategy. The formation of a candle, how the candle looks on your chart, is telling a story about what people, or basically the entire market, is thinking about price and value at any given time. So think about it like this. If a candle opens and then runs up, closes at the high, what does that tell us about what's happening in that candle? What is the data, all of the orders transacting and taking place, what is that actually telling us about what's happening and what the buyers or sellers are actually feeling at that given time and how they're acting? Well, obviously in this case, the buyers were way stronger than the sellers and were able to push price up for the entirety of that candle, and are closing at the highs. That is a bullish candle. And it's the exact opposite if a candle is opening and then closing at the lows. That is typically going to be a bearish candle. Now, what happens in the case and what does it tell us about what's happening in that given candle or about price action as a whole if a candle opens, pushes to the upside, and then sells back off aggressively, either near the lows, creates lows, new lows on that given candle? Well, in that case where price runs up and then sells back off, it's telling us that the buyers have attempted to push price higher. And they did. But then the sellers were so strong that they were to basically wipe out all of that buying pressure on all of those different price points to the upside and have pushed price all the way back down. So who is in control at that point? Well, obviously, the sellers would be more in control. Same thing in the opposite direction. If the sellers start very aggressively pushing price to the downside, and then all of a sudden you see aggressive buyers pushing that back up, well, obviously, those buyers are going to be a little bit more strong and stronger than those sellers, and it tells you that that could potentially continue. That the buyers, in that example, could continue to push price to the upside. Now, how do we know for sure that there are aggressive buyers or sellers like this? Well, you can look at volume, but a lot of people like to make volume the core of their strategy. And a lot of you guys that have been in my educational programs, we talk about volume and kind of when to use it and when not to use it. People like to say it's a leading indicator. I disagree with that depending on what time of day you're in, especially if you're swing trading on a daily time frame. And in some cases, it can be very misleading. So in some cases, it can be helpful. But as always with anything in trading, it is not the end all be all. So guys, these types of candles where we see price move in one direction and then start to move back in the other direction within that same candle are going to be the ones that we're looking for. So let's actually go through the overarching kind of thesis for this strategy here when we get a little bit more specific before I show you a bunch of examples when we go into the charts. So moving over here, execution of this strategy. So what time frame are we going to be using for this? Well, we can either use the 5-minute or the 15-minute time frame. From my experience, these are the two time frames that work out the best, but the 15-minute time frame is typically going to come with a little bit more risk in terms of points, especially if you're trading futures. So just be aware of that when you're deciding how many contracts, either options or futures, preferably futures with this, that you are going to then buy or sell. Now, when we see this candle form and price begins to make a large move up or down, but is aggressively bought or sold into, our entry is going to be at the opening of the next candle. So the next 5 or 15-minute candle. This is going to make a lot more sense when we head over to the charts. And your stop will be placed a couple of ticks below that prior candle low, or the candle that actually made that move. Aggressive move in one direction, and buyers or sellers end up pushing that in the other direction. Now, where are we going to be taking profits? Well, we're just going to be taking our profits at prior levels of support or resistance that coincide with that previous trend that was happening, or we're going to use something else that I really love to use on a lot of my charts that you guys have seen on a lot of the trades that I've had, especially if you've been following along on Instagram or TikTok when I show you some of these trades here. After the first take profit is hit, usually it's going to be about a 1 to 2.5 risk to reward. We'll set our stops at break even and then continue looking for further take profits along the way at other levels. So let's actually go into the chart here and take a look at some of these examples. So moving over here, we're going to come to just Monday of this week and kind of go through some of these. So what do we see when we look here? We see price coming in pre-market, aggressively selling to the downside. And then what do we see on this candle right here? Price opens, sells aggressively to the downside, moves back up and closes. Okay, so on this example here, we can see, all right, we can set a long position at very close. It's not going to be exact, guys, but very close to the opening of the next candle, just like we were talking about. You set your stop a couple of ticks below that low, and then you can target previous levels. So in this example, I'd be targeting right up here. Nice little 1 to 2.1 risk to reward here. And as you can see from this example, price runs up, hits that one. What would the next level be? So the next level that I would target would be the bottom of this zone. Now, I don't draw these zones. This is just an indicator that I have on the charts. They're called the BJ key levels here. In the settings for this, I'll pull up the settings tab right here so that you guys can see. Just take a screenshot of this. This is pretty helpful to have on your charts. It's not the same thing as supply and demand zones, but these zones are respected a lot when price is trading around them. Again, I'm not using these for specific entries. I do use them for some exits here as some key levels that we could see some resistance. But again, like anything else, it is not the end all be all. So that would be TP2 right here. And then you can target those pre-market highs at about 1 to 4.7 risk to reward. Very, very easy trade there. Now, let's keep going throughout the day. We have a big trend moving to the upside. Now, what do we see? Now, this is on the 5-minute time frame here, guys. You can see it right up here in the left. So we move over here. This candle right here has my attention. You have a big move up, kind of some volatility in here. All right. You have that really aggressive push up. Sellers come in and knock it right back down. Okay. So now we're going to be looking for a short position here. So again, very similar. We're going to be looking at the opening of this candle. We're going to be putting our stop a couple ticks above the high. Now, where would these levels be that we could potentially go and target? Now, these BJ key levels are a little bit far away, so we don't really have any clean levels of support here. So in that case, I'd probably just be looking for a straight 1 to 2 risk to reward for that first take profit, just like I was kind of talking about. That typically you are going to see these levels be at about 1 to 2 risk to reward. So that's where I would place this here. The second take profit here, I'd probably go all the way down to this level. And in this example that we're looking at here, guys, you would have gotten stopped out at break even on the remaining of your position. So that's 2 winning trades in one day there. Now, again, I'm just going back to the beginning of this week to show you guys this, but there are going to be a lot of examples, and I don't want you guys to think that you're going to have 3, which there's another one, 3 crazy trades like this every single day. This is just going back to the beginning of this week to show you guys some examples. So we have another big move up, significant move to the downside, and then we see open candle here, candle opens, aggressive move down, gets bought right back to the upside. So you'd have another long position here. Opens right here, you have your stop a couple ticks below this low. Now, where would we target here? Again, you don't really have any clean levels here, and if you were to go to the top of this zone here too, you'd still be at about a 1 to 1.75 risk to reward. So in this example, I'd probably target this high here for around a 1 to 2.5 risk to reward, or maybe even this candle high here, or this wick high. Again, once price runs through here, move stops to break even, and you can target day high up in here for about a 1 to 4 risk to reward. Now, you guys can go back and back test this. We can look at a couple of other days here. I don't want to make this video too long. We have this move to the downside, not really any candles down here. Some people like to use these candles. I personally don't. That's inverse to me. This is showing that the buyers were trying and the sellers stepped up and showed that they were still very aggressive. In this example, the buyers end up taking this back to the upside. Now we have this candle here, not quite perfect for me to really want to enter this one here. To the downside, let's see if we can continue and find another one that looks okay. Big move up here. This one's okay, nothing crazy. You didn't really have anything on this day here. Moving on to Wednesday. This is a Powell day and CPI, so I typically don't trade these days anyway, and I don't really expect us to see anything on this day as well. Let's see here. Yeah, nothing really on this day. You kind of have this coming into the end of the day, but I wouldn't really be taking a look at that. Then we have rollover, and this is current action going through today, guys, so nothing too crazy left. But you guys can see how powerful this strategy is, and especially the risk to reward that you're getting when these trades do fire off. If you guys have any questions about this, make sure you guys drop a comment down below. I'm going to be answering all of your guys' comments as usual. And again, make sure you guys are hopping into that watch list to make sure that you're getting even more day trading strategies, learning how to find stocks that are about to explode before they do, and being able to access those 3 times a week private live streams. So that's going to wrap it up for this one, guys. I'll see you in the next one. Peace.